All right, guys. Welcome to today's session. I'm happy to have all of you here. Today's class is one of the most important class that we are going to hold, because if you cannot understand how the money works, you always think that trading is about signals or luck or something of that sort. But if you can truly understand how the money flows in and within the market, that alone is an edge. So guys, let's get into it. Today's class we are going to be focusing. Please, who are you muting the mic, please? Mute your mic, please. All right. We are going to discuss how the financial market works. In last session, we've been able to establish that a financial market is any place where people exchange assets that they hold, that hold value, like currencies, crypto coins, stocks, commodities, and even derivatives. We've been able to establish that. But today we are going to dive a little bit deeper into how the money actually flows within the market. Am I making sense? Now let's take for instance, right? If you have a Nigerian business and you want to import goods from China, so one thing is going to happen in that transaction is either you transact your money, your maybe Nigerian naira, to the Chinese yuan, or maybe either way you have to transfer your money, Nigerian money, to that currency. So that when that transaction happens, right, that's the forex market. We've been able to establish that. Now maybe when you have maybe a signal guru tells you to buy a coin, once you buy that coin, you are participating in the crypto market. Alright, right? Now, for instance, what happens, right, in the market is very simple. As a trader, or as someone that's participating in any transaction, either it being crypto transaction, financial and forex transaction, that money is not like it's living between the two of you or between that deal, outside of that deal. That money is circulating between the two of you. Am I making sense? So now when you are in the market and you buy, let's say you bought a stock or an asset at the rate of 1 naira, and then that stock dropped in value to maybe, let's say, 0.5, and then you opted out of that market, like you stop that loss, right? What happens to your money? So guys, that's what we are going to explain today. And one thing I want you guys to have at the back of your mind is very easy. The market isn't it isn't magic. It's just a system, right, that gives equality between a buyer and a seller of a particular asset. Whenever you press buy or sell in the market, someone at the end of the wire is pressing sell for you to buy the asset. So that's just it. Money doesn't actually leave the market. Money circulates within the market. All right. Let's continue. All right. Now, global flow. How does the money flow? So in any financial market, money just moves constantly, like water, from just this market to another, from this guy's hand to this guy's hand. Are you understanding what I'm saying? So now, for instance, let's take maybe our local markets here. Right now, if you are someone that sells shoes, you sell your shoes and then you collect maybe money for that shoe. You won't just keep that money, right? You have to go outside of your shoe market to go and buy another thing in another market. Am I making sense? So that's what happens in the market. Now let me make a chart for you guys. Now this is what happens from the global and the biggest of them, and then we have that's to and pro. We might have stocks or maybe indices. Alright. This is how money flows in the market. Now there are certain times that forex market doesn't actually go right. It's so volatile, it's so risky. So what the money do is simple. It flows from that forex market to something that's less riskier environment. Are you understanding me? So money flows from there. So there might be a time of the year that all the money in the market are more in the forex market, and then there are certain times in the market in the year that crypto and stocks or indices have more volatility, like have more liquid money that's moving to and pro inside. So your job as a trader is simple. Your job as a trader is simple. Is to understand where the money resides. As simple as sites. I'm not sure about this. Excellent. Shit. Guys, can someone hear me?
Yeah, we can hear you.
Please, where did I left? Because I don't know what happened. My network just went off. Where did we stop, please?
You were saying market flows to the lesser riskier.
Yeah. So money moves from between those institutions, those markets, maybe from forex to stocks and then to crypto indices, but money just flows between those markets. So your job as a trader is simple, is to understand where the money resides. Are you with me? Because if you want to be profitable in this place, in this world of trading, you have to understand how the money flows. So your primary job as a trader is to understand where the money is. There might be a time of the year that forex is more volatile, it's more liquid. So at that time of the year, you will focus in more of your trades and energy on that forex. And then crypto, your job as a trader is not just to say that no, me I trade only this. Understand? Is to understand where the money flows, and then and then position yourself to profit from that flow. So now every candle you see on your chart is just as the position of money flowing. Now let me show you a candle. Now let's take this very candle as an example. Now this volatility 10 index, right, was trading at around 13th October at around 10 o'clock. This pair was trading at this zone 580, and then before the next 15 minutes the pair was trading at around 5,799. Around 10 on the dot, this pair was trading around 5,800, and then closing in the next 15 minutes, this particular asset was trading in the range of 5,799. So what I'm trying to say in this essence is simple. Money flows in the markets, not outside, not outside, right, but just within the market. So your job as a trader, after understanding how or where the money resides, is to position yourself in a better position, to position yourself to profit from those movements. I hope I'm making sense. So now this change in price, maybe from around 500, and let me mark it. You can see this very particular, at this very junction, you can see something around the price was around 5,800, and then in the next 15 minutes, that's 30-minute time frame, right, the pair was trading, you can see right here, at 5,799. So this is how money flows within the market. Are you with me? Please, if you have any question at this junction, please ask. If I hear quiet in the next minute, I will assume that there is no question. I'll continue. All right.
Assalamu alaikum.
Wa alaikum salam.
So sorry.
Can you speak up, please?
Yeah, I said you were talking about rotation of price in the market. That is one never.
I cannot hear you. Can you come a little bit closer, please? Sorry. You said
the money doesn't
live.
The money doesn't. If you take this particular candlestick you use as an example.
Yes.
So the change of price, like the explanation you gave was for change of price, not speculation, not rotation of like money
in the market,
like the changes in the price.
Yes.
Within a speculated time.
Yeah. Thank you. Is that all?
So that change is the rotation.
That change is
the rotation of the money.
Yes, exactly. We'll get there, right? You understand why price changes, right? You will understand that better. I'm just trying to trying to explain to you how money flows within the market. What I explained about forex, crypto, and indices was how money flows, around the markets. That's the forex
Okay.
market, the crypto market, and the stock or indices market. Now, what I just explained right here is how money flows in any particular market.
Okay, excuse me, one more thing, sir. So basically, the change of price is the flow of money in the market.
Yeah, yes, exactly. That's just it.
Thank you, sir.
Any more question, please? Any question, please? All right. Now, let's take forex as our main topic. Let's explain it further. So forex, right? You've all heard forex over and over again, but really, what's forex? I know we've been able to establish what is forex. So forex, right, is the short form for foreign exchange. Are you with me? Forex is the short form of foreign exchange. Alright, forex market is the largest financial market in the world. I repeat again, forex market is the largest financial market in the world, because it's the only market that has over 6 trillions that are being traded, $6 trillion that are being traded every single day, day in, day out, day in, day out. Let me write it. The largest financial market with over 6 trillion being Alright. The forex market is the largest financial market in the world because it has over $6 trillion that are being traded daily, on a daily basis. So now, once you are participating in the forex market, you are basically trading a country's economy against another. Am I making sense? Once you participate in the forex market, right, you are trading a country's economy against another. Basically, what you are saying when you are trading forex is that a certain country's economy will perform better or lesser than the other country's economy. So you act on that. Now, for instance, let me make sense. Now, when someone participates or trade USD NGN, what you are basically saying is simple. The US dollar, like the US economy, will trade at that very same time, will trade that, and this has to do with either you are going long, you are going short, or you are going long. Let me adjust this so that it can make a little bit sense. Maybe you are participating, let's say short or selling, and then buying or longing or buying. Alright, let me make this, and then this can have it on screen. Alright, So now when someone participates or trades the USD, that like the US dollar against the Nigerian dollar, in the Nigerian naira, sorry, and then he went on and sell that pair, what he is basically saying in essence is simple, that the American dollar, right, will rise will rise against the Nigerian dollar. Are you understanding me? He is saying that the Nigerian naira will decrease in its economy or in its value, and then the US dollar will increase in its value. That's what you are saying when you are participating in the forex market and shorting a certain pair. And the same is for when you are longing that asset. When you are longing the USD, for instance, against the Nigerian naira, what you are saying is simple. The Nigerian naira. Oh, sorry guys, I just confused myself a little bit. Alright, let's come back here. Now, when you say you are shorting an asset, what you are basically saying is the pair that you are like marrying, or that you are going against the other, the USD now, for in this scenario, the US dollar economy will go higher, and then the Nigerian naira will go lower in price in its economy, general economy. Because how we can understand a country's performance in economical wise is by you taking its currency, right, and then putting it against another. So now when you are shorting the USD Nigerian naira, you are basically saying that the Nigerian naira will decrease in its value, and then the US dollar will increase in its value. Same goes for USD. When you are longing it, you are basically saying the US dollar will decrease in value, and then the Nigerian naira will increase in value. Am I making sense? Please, if you have any question, now is the time. If there's no question, then I'll continue. So, what are the major pairs of the forex market? Which pairs, like which countries' assets and currency are traded more? Now, we have the major pairs. They are divided into two. We have major pairs, and then we have minor pairs in the forex market. All right. For major pairs, we have one of the most used or traded economies in the world. That's the euro against the US dollar. This is the most traded economies, or the most traded pairs in the world. The euro against the US dollars. And then we have the Great Britain pound against the US dollar. We have US dollar against Japanese yen. So these are the most traded pairs in the world. And second traders, and this set of pairs, right, those pairs that have USD on them. After this, we have Australian dollar against US dollar. We have and then I think we have, is it the Chinese yen? I think Chinese yen against against the US dollar too is one of the major pairs. And for minor pair, we have the euro against the Great Britain pound. We also have the Australian dollar against the New Zealand dollar. So those pairs too are minor pairs.
Now, the fire.
Do you have a question, please? All right. And then we have pairs that are less traded, that don't have a lot of liquidity in them. We call them exotic pairs. Those pairs include, the US against the Nigerian naira, and then we have the franc against maybe yen, or against, let's say JPY. Those coins, those pairs are not traded as, they are not traded consequently or more like the Euro GBP or the AU, the NZD or pairs like those. So those are the characteristics of how pairs are, how forex market are being traded every day. All right, let me screenshot this so that maybe I can post for you guys. I want to delete this so that I can have space. All right. Now,
Assalamu alaikum.
wa alaikum salam.
Sorry, can you briefly give us
Please speak up. I'm using a PC right here, so I cannot hear you clearly.
Okay, can you briefly give us the definition of forex trading? Like,
what is forex trading?
Yes, briefly, like the definition, like.
So, forex, right, is the short for foreign exchange. Let me write it. Forex, right? Forex market. Let me put this in total. So forex market is a short for foreign exchange market. Are you with me? So basically, when like you as a person participate in the foreign exchange market, what you are basically doing is simple. You are exchanging countries countries here for another all right. Foreign is like exchanging a country's peer for another peer. Am I making sense? Okay, let me just allow this. All right, are you with me, Sadiq? I think you are the person that
Yes.
Are you with me?
Yeah, I'm with you, sir.
So forex market, who participating in the forex market is exchanging a country's pay for another pay.
Okay.
Does that make sense?
That's the currency, right?
So now,
Yeah.
when you participate, now, for instance, we have what are those people called? Borrow the change. Yes, these people that, if you know any borrow the change, once you go to that place, right, you are exchanging your naira for dollars or for Australian dollar or something like that. Are you understanding me? Once you participate in that transaction, you are participating in the forex market. As simple as that. Now, if someone is trading maybe the US dollar against the Nigerian naira, in essence, right, at that very moment that you transferred your Nigerian naira to US dollar or your US dollar to Nigerian naira, right, you are participating in the forex market. So simply, when I do something like this and say you are putting a country against another, you are putting a country's value. Now you hear a lot of time that people are saying dollar ya sauka ko kuma naira ta sauka, dollar ya rage kuɗi. So what is happening at that very time is simple. Now let me go to maybe the charts of any forex pair, then I will explain to you. Now let's see, I have, okay, right, see, we have the Euro USD right here. Let me explain this. Let me go to the daily chart. All right, now this is the euro dollar. This, everything you see here, right, is as of result of market moving. Are you understanding me? It's a result of market. Are you with me? It's as a result of price change that these things happen. The US dollar, now let's take this same day, Friday, this recent Friday, October 17th, Friday. When market opened at around 12 o'clock, the market opened. This pair was trading around $1.17 1.17, right? So, but it closed around 1.16. Now let me explain. Now at this very same day, what happens was, it was simple. Around 12 o'clock, if you have $1 US, right, when 1 euro, you will be exchanging that euro for 1.17. But by the close of the day, if you have 1 euro, you can only exchange it for 1.16. Now let me go to a pair that has more, that the price is more. All right, yeah, well, I have the euro. Let me take this for instance. Maybe you understand more. Oh yeah, 175 and then 174. Now look at the euro against Japanese yen. Now if you have 1 euro and you want to buy maybe something from Japan, so that 1 euro, like your 1 euro is at the start of the day, right, that your 1 euro is worth 176 yen. So for 1 euro you can get 176 yen. But at the close of the day, that should be around 12 o'clock, we have 1 euro. You can only 1 euro, right, you can only exchange it for 174 yen. But in the morning, it can be exchanged to 176. Are you understanding what I'm saying? So basically, when you participate in this current market, in this very same scenario, you are simply saying that maybe now, for instance, if you take short on this market, you just woke up on that day, you do your analysis, and then you took this trade. Let's say maybe you bought yen with your euro at the rate of 175. You had it in your mind, or you have everything planned, that before the close of the day, that very same yen will be traded against the euro at 174. So you short that market. Have I explained your question?
Yes, sir. I understand. Very clear.
So, mashallah. Now, how does forex works? What makes forex, right? What makes country's economy to fluctuate, to change prices. Am I communicating? What makes forex market to fluctuate? What makes price changes? What causes price changes in the forex industry, in the forex market? All right. Now let's start with one of the one that has more influence on how a country's pay is valued, how a country's economy is valued. We have interest rates. Right? What are interest rates? Now, for example, now if you are around, right, maybe around that 12th of October this month, right, maybe you've had that the crypto market crashed. What made that market to crash was simple. The US government had rates on Chinese export. So what interest rate means is simple, that any country that imports goods to your country, there is a rate at which you will be charging them, like it's like a tax. Are you understanding me? And on import good or on companies. So those interest rates have much influence on how a country's economy is being perceived. We also have inflation. Inflation, right? Inflation is simply the increase in price or decrease in price of commodities. Now, in Nigeria, we used to hear a lot of people saying inflation yara, inflation yarigi. What is simply being stated in that scenario is simple, that commodities such as oil, gas, gold, and other things have decreased in price or have increased in price. Are you with me? The price of things is what inflation is. Now, if a country's inflation increased by let's say 10%. Now, if you can go to a shop and buy, let's say, a bag of pure water at the rate of 100 naira, and then that country's economy has an increase in its inflation of 1.1, of maybe let's say 1%. So what will happen tomorrow if you go to that very same shop to buy pure water? They will tell you that maybe like inflation has rise, and then that same pure water is now at the rate of maybe 110 naira. Are you understanding me? That's for 1% change. Now maybe for 10% change, maybe they will tell you that it's no more 110, maybe it's around 120 or 30 or something like that. So that's increase in inflation. Or decrease inflation is the otherwise. Maybe you go to a shop and then something has decreased its value. So that's inflation playing right there. And then we have political stability. Right. So political influence or political sentiments play a vital role in country's economy. Now, if person, right, I don't know, I'm not sure how what the maybe Israel or Palestinians use, but during that war between Israel and Palestine, if you are trading any of that country's pay, anytime that either Israel or Palestine launch an attack, so that country's economy will go in accordance with that strike. Now let's say maybe Israel launch a strike on Palestinian currency or economy will go down, and then the reverse is the case, and Israel's currency will go up. Now, when maybe a president of a country die, are you understanding me? That country's economy will be in chaos because you have investors that will be promoting like that will be removing their money or investment from that country. Am I making sense? So political stability plays a very vital role on how a country's economy works. And then we have the central bank policies. Alright, central bank policies such as the IMF or Fed or what have you, right? There is sometimes now there's this time in Nigeria, right, that Nigeria cannot go to central bank to borrow money anymore because we've exceeded, is it our limit, or we haven't paid a lot of debt that we owe the central bank. So at that very instance, our country's economy was crashing because we cannot borrow money, and investors or the market flows with those policies that central bank issued out. All right, so those four are Walaikum salam. Question please. Eh? Can you speak up? Speak up please, I cannot hear you. I cannot hear you. Sadiq.
So World Bank, what is
World Banks, yes.
Okay, so
Yeah, World Bank. Alright, so those four, as I've listed below, are factors that have effects on how a country's economy is perceived. Now, if a country, maybe let's take US for instance, if the US government raise interest rates, a lot of investors will buy will buy US dollars because they have it in their mind that a country, maybe let's take China for instance, has to pay more to the US. In that case, the China's currency will go down in value, and then the US dollar will gain more in value because this dollar will be stronger than the yen. Are you understanding me? All right. Now,
yes, sir.
I think we have time. Let's explain the crypto and then see if we can touch that of indices, because I will not be going into stocks because I personally don't trade stocks, because now in our home part of the world, right, we don't have the indicators or the know-how on how to trade stocks, because stocks mostly go with fundamentals, and here on our open part of the world we trade with technicals more than with what's it called, fundamental analysis. All right, so crypto. Now, while the forex market, right, is like traditional what do I call, it's traditional and bank driven, like it's just a country's economy. Crypto is the digital economy, because forex, like those peers or countries' economy have their own peer or currency, physical currencies that can be exchanged between and around bank systems. But crypto is a digital economy. me write it. Crypto market. Cryptocurrency. Let me just complete it. Currency markets. Alright. So cryptocurrencies are digital economy. I've been able to establish this in our last class, so I'm just going to go a little bit, then we'll see. Our digital economy, that are powered by blockchain technology. Alright, so cryptocurrencies are digital economies that are powered by blockchain technology. Now, the forex market, each country's currency is being regularized and maintained and kept in its own central bank. Now in Nigeria, our naira is being reserved and controlled and what do I call it? Maintained, right? And regularized by the Central Bank of Nigeria. Same goes for US government. They have their own IMF. The Great Britain, the Britain have their own central banks. But cryptocurrency is different. Cryptocurrencies are decentralized digital assets that are not controlled or that does not rely on any government or bank. Let me write it. Are decentralized digital assets that don't rely, that are not controlled by banks or governments. Alright, so unlike for forex, cryptocurrencies are digitalized. They are not controlled by anybody. They simply exist and controlled and maintained by blockchain technology. Am I making sense? So let me see. Let me see if I can show you how blockchain technology works. Blockchain. Alright. Let me show you how blockchain technology works. How crypto actually works. Am I still connected? It's not responding. I think it's loading, so just hold on a minute. What's wrong with this thing? Before it opens, let me explain. Maybe in a later time I will explain. I will show you how it works. So what are blockchain? What is blockchain? Right? So blockchain technology blockchain is a decentralized. What this decentralization means is simple, that it is not controlled by anybody. That's what decentralization means, that it doesn't have a central entity that controls it. This is a centralized ledger that records transaction occurs. Alright, so blockchain, right, is a decentralized ledger. That means that it is not controlled by anybody. What a ledger means is, if you've studied bookkeeping, or if you know what bookkeeping means, like a ledger is a book, right, that we keep all forms of transactions. It's either in or out of that of that business, right? We keep records. So that's what a ledger means. It's a decentralized ledger that records transactions across multiple computers. This blockchain, right, there are supercomputers that are used to store those records. Now, if you transferred maybe a Bitcoin in early 2014 and you still have that, there's this serial number, that like the blockchain code in any transaction, right? If you still have that blockchain code, you can still be able to see how, now using this same blockchain, you can be able to access that same transaction, right, and see how it was done, who sent you the money, how much amount, and what have you. So blockchain is simply a decentralized ledger that records transactions across multiple computers. With the help of the blockchain technology, that's where cryptocurrency emerges. I want to show you how blockchain works so that you can maybe get it. Let me see. Let me use my phone instead, because this is giving me a little bit of hiccup. Blockchain. Hello? What do you say? I wanted to show you how like the chains work, but seriously, the network is not on our side. So let me show you how blockchain technology works. Alright, you see, this is how blockchain technology works. So each transaction you make on any network, be it the Bitcoin system, the Bitcoin network, or maybe Solana network, or Ethereum network, or BNB network, or any network out there. So this is how your transaction is being recorded. Now, every block, right, has its own unique and different code than the next one. So each transaction that is being done on any network, this is how, in this form, is how the transaction will be recorded on the computers. Am I making sense? So any transaction, right, is a unique and different transaction, and has a different and unique block than any other, and that unique code will not repeat itself forever. So this is how blockchain, or this is how transaction on any cryptocurrency are being recorded. Yes, with the help of this technology, like the blockchain technology, that's how crypto emerges. I wanted the network to open, but unfortunately it's not. Alright, let me see. Alright. Nope, I just see it and I have just saw it and I don't know what happened. I pressed somewhere. Alright. Let me show you. You see the blocks right here. Where's this thing now? Guys, it's not working. Let's just get back. So that's how blockchain technology actually works. Now alright, so in this very same scenario, right, Bitcoin was the first ever developed coin. Are you understanding me? And the crypto market, we have two types of coins. There are only two types of coins in the world. Only two. Alright, let me write them. We have the Bitcoins and then we have altcoins. Those are the only, when I say only, I mean the only types of the coins that are in the world. We have the Bitcoins and then the altcoins. Alright, Bitcoins first what's it called? First designed in 2014 by Satoshi Nakamoto, an unknown entity up to today, remain the leader in the crypto world, while altcoins, short for alternative coins, are you understanding me, are the rest of the coins that were developed after. So any coin that you see out there is either a Bitcoin or an altcoin. Altcoins are, Ethereum, Solana, we have XRP, Ripple, we have Cardano as the other, we have Zeta, and a lot more. So those are the two types of coins, crypto coins that we have, cryptocurrencies that we have: the Bitcoins and then the altcoins, alternative coins to Bitcoin, alternative to Bitcoins. So as simple as that. Now when Bitcoins rises, you see a lot of the times that all the other currencies makes that same movement. Now let me show you. Now I have Bitcoin right here. Just examine the chart. Sorry, let me go to maybe the 4 hours time. Just examine the chart, right? I want to show you something. Now you can see it right here. This is the Bitcoin on a 4-hour time frame. Can you see the chart? Now let me go to Ethereum. You see something as unique as this one. Yeah, you see? This is the Ethereum. You can see it right here. Ethereum. You can see Ethereum. And then you have the BTC right here. You can see that all the other coins, right, follow in the footstep of Bitcoin. Bitcoin is the giant. Bitcoin is the mother. It is the father. It's the leader in the crypto industry. Most of the times. Now I can go to Solana and you see something like this. You see the same thing on Solana. The same thing, almost the same thing as XRP. And then almost the same thing as SU, as Doge, as Pop. You see? So Bitcoin remains the leader in the crypto industry. That's that for crypto, right? And for altcoins. Now let me show you. Have I shown you guys how crypto works? Have I shown you that this?
Please, sir, I want to ask, sir, how about meme coins? Is it meme or memes coin?
Meme coins.
Something like that.
They are called
Yes.
meme coins.
Okay.
They are part of the altcoins.
Okay.
And then we have another type. No, although it's not actually crypto, right? We have. Let me just write it right here. We have stable coins. They are not bitcoins and they are not altcoins because they are usually countries in the economy. The stable coins. That's why I didn't include them, because they are not actually bitcoins and they are not actually like. Now we have. Let me write it. We have the USD coin, or then the USD Theta. Are you guys with me? USD coin and then USD Theta. They are not actually bitcoins. They don't go or they don't perform like the bitcoins or altcoins do. They are generally like countries coins. Are you with me? They move with the country's asset, with the country's economy. So they are not actually bitcoins. They are known as stable coins. And then you that ask for what's it called? Meme coins. Meme coins such as maybe Pepe, or what's this coin? This coin that hamster. All those things, all those coins, right? They are all altcoins. All the meme coins, they are all altcoins. Am I making sense? Alright. Bitcoin remains the leader in the world of crypto. Who is the person? I'm having a lot of people that I'm not sure where I got them from. I will have to go back on this. Are you guys with me? I'm seeing people that I don't know of. Alright. So
yes, we are together.
I'll get to that. Okay, not right now, please. Bitcoin remains the leader in the crypto industry. MashaAllah. Alright, the BTC, as you well know it, is the leading force in the crypto space. Now let me show you something. This is the Bitcoin chart on the 4-hour time frame. Please, can you just examine it for a second? Let me show you something. Just look at it. Capture this image in your head. Right? Now let me show you something. This is the Bitcoin chart. Let me show you why a lot of people prefer Bitcoin against everything. Now, this is how Bitcoin has been performing in the recent days. Now let me show you Ethereum. Can you see the similarities in the coins? So when Bitcoins moves, all other altcoins follows Bitcoins, because Bitcoins has dominance over all coins, all other coins, all other altcoins. Now this is for Ethereum. Let me show you Solana. You see something else. Can you see? Same goes for XRP. Same goes for SU. Same goes for Pepe. So you that were asking about meme coins. Alright, you see? And all those coins follows in the footstep of Bitcoin, because Bitcoin is the leading force in the crypto space. Any question, please? Any question? Now, when
No
someone
question for now, sir.
eh?
I said no question for now, sir.
All right. So, why does people, right, actually want to get into crypto? Crypto is very volatile. One of the very things that makes it stand out, volatile, because of its volatility. Crypto is sentiment driven. What volatility means is simple. Now, you can wake up a brokey and maybe you have $10 in your account. You can buy a meme coin, and then in 1 hour that meme coin can go to the moon, and then you can be a millionaire. So that very instant movement is what volatility means. Now let me go back to that chaps. Let me show you something. This very same scenario, can you see? Bitcoin, okay, this was TRB, this is TRB. This very thing, TRB was trading in the first hours of Friday around 9 o'clock. TRB, that's the name of the coin, was trading. What am I doing? Alright, TRB was trading at the. Come on, what am I doing? Alright, TRB at the first hours of Friday, TRB was trading at 34.33 per US dollar. Now let me show you how volatility works. Can you see? Now, before the next the next 12 hours, right, TRB was trading around 9.16. You can be a millionaire at which time? At 9 o'clock, and be a brokey around 9:16. That's just how crypto works. This sudden movement in price, this sudden change in price is what volatility is. You can be a billionaire, you can be a trillionaire in a minute and be a brokey the next minute. Those movements, right, are what cause people like to go into crypto space more, because of the volatility. And then crypto is sentiment driven. Now, if you are around at let me think, was it on the 14th of this very month, right? 14th or 10th of this very month, you've known that a lot of things happened. There was even a millionaire that killed himself in a Lamborghini because China retaliates back on the US. It closed its borders to US imports. It did a lot of things. So that very incident that happened, crypto reacted to that. It is sentiment driven. It is driven. Now, when what's it called? President Trump launched his coin. A lot of me personally, I made mad amount of money in Trump. Let me see, maybe I still have the chart. I made a mad amount of money. I'm not saying it I made crazy amount of money. Let me go to the daily time frame. Oh, they've delisted this coin. I wanted to show you how crypto reacts to sentiments. Now, what I'm trying to say is, when Trump was aspiring for office, that was in the late 2024, this year that passed, that ended around, was it November? Was it November that they did the election? November or October? So what happened was simple. Trump launched a coin. I'm having a lot. I'll have to recheck this. Am I with you? All right. Trump launched a coin that was called Trump. So because Trump has made a lot of promise on the future of crypto, he told press and everybody that he was going to adopt crypto, he was going to do this, he was going to do that. When he launched that, saying that coin, that his coin with his name, right? That coin skyrocketed to the moon. People were making millions, bastard millions. Are you with me? Because the market felt that if Trump was to be elected in office, the crypto market will explode to the air, and that was what happens, mind you. So what I'm trying to say is, crypto is sentiment driven. Why? Are you guys still here? Please, someone should talk to his mic so that I know I'm making sense.
Sam,
Yes, I is.
I'm not that clear with this sentiment driven.
You are not clear. So
Yes.
what I'm trying to explain right here is what is it? What makes crypto so beautiful that it attracts a lot of people to the crypto space? I said crypto is very volatile. I've been able to explain that. Do you have any problem on that?
No. That one is clear.
Okay, sentiment driven. Now, crypto follows sentiment. What sentiment means is simple. Like what you have or what you want to do. Let me see how I can explain sentiment to you. So, sentiment is how investors or how people feel about you, or like how the market perceived you as an individual or as an entity. Are you understanding what I'm saying? Now, a lot of people take Trump as a good person in terms of crypto, as a very good person in terms of crypto. So they have good sentiment toward Trump. Are you understanding what I'm saying?
Yes, I'm getting it.
Alright. So now when was it called? When Trump launched his coin. Okay, let me see, it has opened. Let me show you. Oh, they don't have the full charts because Binance didn't list the Trump coin when a lot of exchanges were listing it, so they don't have the actual charts just when it starts to decrease in value. Okay, I'm mistaken. It's the complete chart, so guys, sorry. Alright, now look at something right here. When Trump tweeted about he even tweeted about this very same coin, right? He later came out and said that someone took his phone, like his son took his phone and then tweeted about the coin. So look at something. The day, like the very same day that he tweeted about it, it was trading around $16. Now, with that $16, at that range of $16, let's say, let me show you how crypto. Let me do a little calculation for you. Now, at that $16, was it 16? Okay, so this is 27. At $27. Now let's say I have 1 million, or let's say I have 10,000 US dollars. and I've been able to get 27 coins. Okay, sorry, 10,000 US dollars. Let's take for instance I have $10,000 and I bought 164. Then my $10,000 can be able to buy me up to 369, up to 368 coins of Trump at that very time. And then before the close of the day, are you with me? Before the close of the day, remember I bought 368 worth of that coin. Before the close of that day, it was trading around 777 naira. Now, without any leverage, without anything, that 368 coins that I bought times 77, then my $10,000 had tripled. Yes, I think it has tripled in its value. That my $10,000 is now 28 or around $30,000. Now, without even the use of any leverage. Are you with me? So these things, what makes this sudden spike in price? What made this sudden rise in price was simple. People had sentiment towards Donald Trump, that's President Trump. When they knew about that coin, a lot of people were buying it because they have it in their mind that he's a good person for the crypto world. So market reacted to that sentiment that people have of President Trump. Have I explained what sentiment means, please? I have a lot of things to cover. Are you with me? Have I explained that?
Yes, sir. Yes, sir.
Can I continue?
Yes, you can move forward.
Right.
Thank you so much.
So, crypto is sentiment driven. Alright. So, those things are what attracts people to the crypto space. Alright. Okay. That's that for crypto. Let's talk on indices and then we'll end this class. I think okay. This class is over 1.5 hours. Alright, let's talk about indices and volatility indices. Is our volatility indices. Why I'm putting these indices is simple. Me currently, right? Personally, I trade volatility indices right now because I understand them, or I feel them more than any other market out there. So the volatility indices. What are volatility indices? Volatility indices are simulated markets. Unlike crypto that has sentiments that aligns with sentiments of people and things, right? Volatility indices are simulated markets. What simulation means is simple. It's like an algorithm. Are you with me? It's an algorithm that creates realistic price movements based on market volatility, based on general market volatility. Now, these very charts that you see right here are not influenced by either the government of any country or sentiments of any kind or anything. Those charts or those volatility simply exist based on an algorithm. They simply exist based on an algorithm. They are simulated markets. Are you understand? Are you with me? They are not tied. Okay, that are not tied to any real world So volatility indices are simulated markets that are not tied to any real world factors. They simply just exist. And what makes them so different than anything is, unlike the forex market, the stocks market, volatility index are traded 247, just like the crypto market. There is no closing time, there is no weekends, there is nothing with the volatility indices. You can trade volatility indices from Sunday 12 o'clock to Sunday 12 o'clock in the night, Sunday 12 o'clock a.m. There is no 1 a.m. sorry. They run 247. Yeah. They run 247. Are you with me? And they are influenced by an algorithm. That creates, yes, realistic prices. Price movement, sorry. Now, they are influenced by an algorithm. Like algorithm, if you know what algorithm is, please. Does anybody who doesn't know what an algorithm
Salam
is?
alaikum.
Wa alaikum salam.
Salam alaikum.
Wa alaikum salam.
Like this, what's it called?
Volatility indices.
Now. Is it more like stable coin, since it is not influenced by
Stable coins.
it is like political.
Sorry.
Yes,
Let me just hold you right there. Sorry, I said, and I quote: stable coins are tied to countries' economy. They are tied to countries' economy. Types of example of stable coins. I told you we have the US dollar coin and the US dollar tether. Those things are tied to the US economy. They don't just simply exist, they are tied to a country specific economy. We even have the euro. We don't use it here. We have the euro tether and then the euro coin. So those are stable coins.
So this algorithm that gives real life prices, right? Like realistic prices, that's realistic prices of what's actually going on in life, right?
They are not being governed by any real world factors.
Algorithm, that's the code, like algorithm.
Set of instructions. Yeah, they are set of instructions.
I think like it's like something programmed.
Yes, exactly. They are programmed to react. Are you understanding me? They are programmed to react to the general market volatility, the overall general market, the forex, the stocks, the crypto, and everything in totality. They are programmed to react to the market volatility. Simple.
Okay, based on what exactly?
The general.
Let me ask.
The general, like how the general market works. Now we have a lot of different types of market. We have the forex market, we have the crypto market, we have stocks market, we have bond and index and commodities market. We also have the indices market. Now, if you take, let me land, please.
General market.
Let me land. If you take all of those markets and put them in one place and measure their performance, are you with me? Their performance, their volatility performance, and then
it will automatically affect volatility
yawa.
indices.
Like you then you sat down and write a unique code that will look into those markets and then creates realistic price movements.
Okay.
Does that explain your question?
Yeah.
All right. So volatility indices are markets. Are simulated markets that are influenced by an algorithm that creates realistic price movements based on general market volatility. Are you with me?
Simulated what?
That
Simulated
that creates realistic price movements. Can I continue?
Yes, sir.
Yes, you can continue.
All right. Types of those volatility indices.
Sorry, I'm not done. Okay.
Yeah? Okay, sorry. Let me just keep it down for you here so that I can continue. All right. So types of volatility, right? We have the volatility 10 that I'm inside right now. The charts. I'm inside the chart right now. Volatility 10. We also have the volatility 25, 15, 35. Okay, here we are. I think that's all we have. And then we have volatility 75 and 100. We also have the boom and the crash indices. Alright, why did I write all those things? Let me show you. We have a lot of them. You can see them right here. They are all volatility indices right here. But I took only those ones so that I will explain something. Alright, so volatility indices are characterized based on how I've just volatility 10. Most cases, I'm not saying every time, most cases has low movements. Are you with me? And then the volatility 25 and 15, right? They have moderate movements. Remember, those indices are based on algorithms, so they follow what's it called? They follow set of rules and codes. Are you understanding me? Volatility 75 have high movement. I will show you the chart and then you understand what I mean. And then crash and boom indices have timed explosive movement. Alright. Now just have this inside your head, then I will continue. I will show you what I mean. Volatility 10 have low movements. Volatility 25 and 15 have moderate amount of movements. And then volatility 75 have high movements. Why? Boom and crash indices have explosive movements. Are you with me? Alright, now let me show you. Let me have you noted what you want to note? Have you guys noted this?
Sure.
Can I continue?
Yes, you can continue, sir.
All right. Now, look at this movement. This is the volatility movement. Can you see? This is on the 15 minutes. I will go to each of these coins and then I will show you. You see? Look at what I mean. Now, okay, let me go to the daily time frame so that you understand more. All right. Let me get this out of the way. All right. Now look at something. Price. This is the daily chart. So now each candle right here represent 1 day, 24 hours. So let me show you what I mean by low movement. Now you see, as long as this candle is, the price was traded in the start of October 14th, right? This very volatility was traded at the price of 5,805, and then you see the massive crash that this market have. But you will see at the end of the day it was still traded at around 5,600. The only movement it had was around 200 US dollars. Are you with me? Change in pips. We have 200 change in pips. Are you with me? As long as this week looks, you see this start was 5,800. You can see it right there, 5,805. And then as long as this candle looks, you can see we are still at around 5,655. So you see the movement still around 200. Now let's go to 25. We have the 25 right there. Yeah, you can see this is the 24 hours. At the start of today, this price, the price of this volatility was around 704,875, and then we closed around, we haven't closed yet, but we made the all-time high, the daily all-time high at around 718. You see, 18,000. Now the movement is 18,000. That first one was 200. Now we have almost 18,000. What's 18? No, it's more than 18. No. Okay, we have around 16,000 change in movement. Are you with me? Now let's go to the volatility 75, and then you see what I mean. 75. Yeah. You see this daily time frame. This is the daily time frame. We were trading at around 58,700 and something, and then the market crashed massively to around. Okay, yawa. Let me show you something. As long as that week we had, yawa. See something. You see, 63, and then we closed the day around 58. Are you with me? The movement is very high compared to the other ones. I think I have a. Sorry guys, what I just showed you about 25 was not Haba. I'm seeing around 18,000 gap. This is the volatility 25. You see, we started the day around 2,490, and then we closed, or are about to close around 2,430. That's the change of 10,000. Are you with me? 10,000. Volatility 10 we had around 2,200. Now we have the change around 2,490, 2,430. Yes, we had the change of around. I'm trying to make this in sense. 2491, 2431. Yeah, what? This is a moderate amount of movement that we had of around 1,000. Now let's go to the 75. You will see So you see 558,000, 55,000, almost 2,000. Are you with me? Now let me show you the boom and crash indices where it explodes and can make you a millionaire the second and make you a billionaire. Look at how these charts move. See something? Can you see the charts are very different from those other ones because they have explosive movements. They move one spike, one movement they move drastically compared to the other volatility indices. They have explosive movements. You can see how the charts even look. You can see. Can you see? You see?
Yes, sir.
See something from here. See how the what's it called? The asset crashed drastically. So those are the types of volatility that we have. Please. Okay. Now this market what makes this market unique is this volatility that I'm talking about. It can make you rich in a second and makes you broke in the next one. So that's that for that. Am I making sense? So volatility cuts both ways. Higher movements means higher profits and then potential higher risk. All right, just know this, guys. This market, right? This market is not your enemy. What did I mark right here? I know I lost. I missed out on a trade. I was supposed to send this trade to my Telegram group. Unfortunately, I missed it and I forgot to send it. Alright, guys, just remember, the market isn't your enemy. This market that you are seeing here, there are a lot of money in here. Your trades, right, reflects patience, your discipline, and your understanding of the market. If you can understand money flow, manage risk, and you can stay consistent, then I can promise you one thing: success will be inevitable. Just understand how money flows, manage your risk, and then stay consistent, my brother. Success is inevitable for you. So guys, I think this class is coming to an end. We've had this session for almost 1 hour 43 minutes. So I think this is it. So just remember, guys, the market doesn't pay you for your efforts. It pays you for your patience, accuracy, and consistency. Goodbye. Stay safe. Okay, sorry, if there's any question, please, before I close, if you have any question whatsoever, now is the time.
So, Assalamu
Alaikum salam.
So, sir, what volatility?
I cannot hear you clearly. Please just come a little bit closer to your mic so that I can hear you, to your phone.
So, like the volatility trend now,
Yes, sir.
has a low movement. So the movement now we are talking about
Has what?
is low movement, right? The volatility trend.
Yeah, it has low movement.
low movement in price, right? Like the
The
fluctuation in
change in
price
price
is
doesn't necessarily affect how much profits you make, right?
yeah,
Eh,
but if a candle is maybe going up, is going up.
yeah,
So regardless of how long it is, the candle, the price is still like low,
the
or
price
probably if the
still what?
price is going down. If the price is crashing, probably
Yeah,
it won't crash. Like the loss will not be more. Like the volatility, the loss in that volatility.
yawa. Let me explain something right here. Thank you for that question. Thank you for that observation. So in this market, I think I found something. 1 minute, guys. Let me just. I think I found an entry on this pair. 1 minute. I'll get back. Let me just see something. Then I'll explain. What's wrong with my network? Alright. Regardless of how markets move, right? What differentiates someone that makes 1 million and someone that makes $10? And what differentiates someone that makes $10,000 and someone that makes $1 in a trade? Is simply leverage and capital. So if you have enough leverage, if you have leverage, right, I will explain what leverage means further, right? But it doesn't necessarily means because the market is moving slowly that you will lose money small. It's how much you risk on a particular trade that you will lose. I will explain to you maybe in the upcoming class, and you understand what I mean. But it doesn't necessarily means because a market is moving slowly that you will lose money small. Gaining our profits in the market, right, are considerable of how much we put in that same trade. How much are we willing to risk is the amount of money that we are going to win. I will explain this further. I'm very sure that you will get it.
Okay, sir. Sorry, sir.
Eh,
But I'm not talking about market generally. I'm talking about this particular asset of
yes, this
volatility chain.
VIX 10, right? Is what
Yes.
you are trying to say right here.
You said it
This
has
one,
low movement.
yes, low movement.
Yes. So I was not trying to make an example. Like if the price is crashing
If the prices are moving slowly,
slowly, so if probably the price is crashing and
eh,
you maybe long your trade
eh,
ahead. So if now the price is going against you,
yes,
the market is going against your own prediction.
eh.
At the end of the day, you lose money. So the money that you lose will not be like as large as if you take
That is yeah. I'm
volatility
trying.
share.
I'm trying to explain it right here. Just bear with me. How much you lose or how much you gain in any market, being it slow. Let it not move for a whole day. Let it just do one peep, just one movement like that. Are you understanding me? The amount of money
Yeah.
that you are going to lose is not necessarily attached to how a market moves. Are you understanding me?
Okay.
I just stated that because so that you will know what you are getting yourself into. What are the
Okay.
difference? That's just why I stated those things. But how much you make or how much you lose in any market, how much you make in any market is inconsiderable of how much you risked in that trade.
Okay.
Yes, it doesn't matter if you
All
are
right.
using in a low movement asset or something that's explosive. It just matters
Okay.
how much you are risking.
The leverage.
Yeah.
Yeah, you come on.
Right. Thank you. Stay safe.